Hey everybody, welcome back to Arthur Invests. Look, we're growing as a channel and I'm so thrilled that you've decided to stick around and hear what this guy has to say. So, what are we going to talk about today? Well, what I want to talk about today is some of the interesting articles coming out around single family homes. Now, the thing that is very interesting to me is what is starting to change, and I actually do think that it speaks to a little of potentially a bubble that could be popping. And so let me clarify my thoughts on kind of what that bubble might be, where that will end up, and then also where we're going to start to see some pressure with regards to rents. Okay. So, first off, let me take you back here. So, traditionally, you look at places that are investing in real estate, right? And so we're thinking about hedge funds, REITs, these other types of investment vehicles from Wall Street. And they typically look at commercial properties, right? So think about your shopping centers, think about your commercial real estate, right? Malls, these types of locations, that would be considered commercial property. And then the other side of that fence is multifamily, multi-unit homes, right? So apartment buildings, right? Thinking about those high-rise building, commercial buildings where they're renting it out for office space. These are traditionally where Wall Street's had some play, right? That's where they've traditionally been engaged in the whole process of real estate investing. And what changed around 2008, when the crash happened, the last cycle, we saw Wall Street start to come in and buy single family homes. And traditionally they'd stay out of that market. And here's the reason why. Because it's very difficult, right? There's a whole bidding process to purchase a home. You have different values, so they're not as easy to just purchase as maybe an apartment building, right? They're all the same unit. Office building, you can basically rent out by square footage. Single family homes are a little different, right? And each of them require a certain amount of repair. It's a bit of well, it's not streamlined and it's not scalable typically. So mom and pop have always had a great place to play. Traditionally, when you want to look at an investment vehicle, single family homes or small multifamilies where investors play. But what happened in 2008 is we started to see investors come in, Wall Street money, hedge funds, big investors who would traditionally played in Wall Street purchased homes and they held on to them. And you can imagine if anybody, whether you were a smart, savvy investor or just somebody who had some extra cash at the right time and you held on to your properties, well, guess what? Over the past 10 years, you've done fantastic. Now, if you're a hedge fund or a REIT or something of this nature and you own single family homes as part of the portfolio, well, you've had a decade to build out systems for property management, build out systems for rehabbing units and leasing them back to tenants. And so that's a lot of what we're seeing in the market today, right? You see that there are these new articles popping up left and right, like Blackstone going out there and purchasing single family homes. About 1/5 of all American homes, we all know this just kind of came out. 1/5 of all homes in America are being purchased by an investor and not typically mom and pop, but we're talking like big Wall Street hedge funds. And let me tell you, they have a lot of cash to invest because the money that they can use is cheap. And then on top of that, right, they don't really care that they're paying a little bit above market because they're going to be buying this stuff scratch and they're planning on renting it back out. And so when they purchase a home and they don't sell it in the market and it becomes a rental, that just elevates the prices a little more. So you have supply demand issues around this because you got Wall Street jumping in, you got millennials who are formulating houses and starting to put together families looking to buy, getting out of cities. You have remote workers now who don't have to live near a city center and are looking for places to have a little bit more land. And then on top of that, prices for everything is going up and interest rates, to top it all off, are at historic lows. You put all those together and you have a crazy, robust housing market happening. Now, so in all of that, what am I saying? Well, where's the bubble here? Is the bubble in the asset price? No, I'm not necessarily saying that. In fact, we know that from the meeting that the Fed just had today that they're not thinking of raising rates, interest rates anyways, until 2023, something of that nature. Now, that may not directly have a correlation to mortgage interests, but I would say that we probably won't see a substantial tick up in mortgage interest rates for at least 2 years. So we might see small movement on that, but we're going to see pretty good rates for the next couple of years. So that means these homes are going to continue to face upward pressure. Now, here's the thing I wanted to point out to you, and it was an article that I saw come across my desk earlier this week. So let me just take a look at this. And I think this is an interesting piece. So where do you fit into this equation? So look, you probably know my strategy. We own a couple of multifamily units, but my main portfolio is really built around single family homes. And let me explain why. We talked about Wall Street getting out of multifamily, and are not getting out. I shouldn't say that because they're largely invested in multifamily, but we see them more interested now, starting to move in to single family homes. You even see firms that are doing build to rent models where they're taking entire communities and they're building them out to rent. These are kind of like what we would consider horizontal apartments, right? Because they're going out further. But these are some interesting articles that we're seeing come out now, is that rent surges on single family homes. And so what has happened in the pandemic, if you've not been aware, you probably have, and this is what I thought at the beginning of the pandemic, I thought we were going to see some serious problems with our portfolio. In fact, I think you've heard the story. I financed 2 of my properties that were free and clear, simply to just have a buffer in case things got really bad. But what happened with single family homes, our entire portfolio, and our property manager, who manages about 500 different units, was saying that single family homes by far and away performed 98, 99% better than multifamily. Multifamily was all where the pain was. The apartment buildings, the shared wall type units were the ones that were performing the worst. And the demand for single family homes went up through the roof during COVID. People wanted space. People wanted a yard. People who were going to get locked down said, look, I want to be in a single family home. And so that became the desirable piece. And then as real estate became more in demand and people were trying to buy homes, it became more and more difficult for these families to compete. So rather than buy a home, a lot of people are saying, look, I'm going to rent a house for a year, and then maybe we'll jump in a little bit. So now we're at a tipping point where people are starting to test the waters and raise the rents. And I just thought this was interesting. Wanted to kind of share that with you. It was a little bit of a long intro, but this is an interesting thing here. So American Homes for Rent, which owns about 54,000 houses, increased rents 11% on properties vacant in April. Okay, so essentially what they're saying is that as these properties have become vacant, they're boosting up the rents to get further up. And I'm going to guarantee you that they're going to get it. And I will tell you, in my market, which is in kind of that Kern Valley here, any vacancies we have are getting filled in a day to 2 days. In fact, my property managers says they can't even put pictures of units online until those are rent ready because they have immediately 5 offers. We closed on a deal 3 weeks ago. We had to make it rent ready, just a little bit of paint and carpet. The day we put it online, we had 7 applicants. And this is not to buy. These are rentals. These are rentals. And that's what we're seeing, just a feeding frenzy. And so now you're starting to see that, I would say largely over the past decade, at least in my market, rents had been fairly stagnant. Like you could raise it a little bit here and there, but you were not going to go for the full gusto because there was just too many properties out in the market. And now we're seeing the complete opposite is people are buckling down. They're paying on time. They don't want to leave, right? They know that if they get out of their lease or want to go into a new unit, it's going to be pretty competitive to get into a new house. So why am I sharing this? What's the whole point of all this? It's to just give you some feedback. If you're looking at buying or getting into rental property, I'm going to recommend that you look at single family homes. Where should you play? And I might do a whole separate video on this, but I think you should be playing where the big boys, this Wall Street type investors, these hedge funds, where you may not want to be, where they're not going to be, right? They're looking for new product. They're looking for stuff that's scalable. You got to go a little bit in the mud here if you want to play in this market. And so I'm going to share a separate video, just made a decision here that gives you some tips, some tactics, some ways that you can close a deal. You can get started with real estate investing in this crazy, wacky market. While rents are surging here, Wall Street's coming in, millennials are building houses, housing costs are going up because the building materials are getting inflated, and interest rates are at all-time lows. So if you enjoyed this, you like the content, don't forget to hit like, don't forget to hit subscribe. I will be seeing you on the next one. Thanks again for checking this video out.